This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending September 17th, 2022. Our question this week is, what is the rule of 72? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 0.45% on Friday and was down minus 4.13% for the week. The S&P 500 decreased minus 0.72% on Friday and was down minus 4.77% for the week. The Nasdaq decreased minus 0.9% on Friday and was down minus 5.48% for the week. Looking at the week, we can see that there were 9 down finishes versus 6 up finishes for the major indexes. On Monday and Wednesday, all the major indexes finished up. But on Tuesday, Thursday, and Friday, they all finished down. The new unemployment claims were 213,000 versus 227,000 expected. Retail sales rose 0.3% in August. Wholesale prices fell 0.1%, but inflation also rose 0.1%. Bitcoin slumped more than 9% after the inflation report. Mortgage demand fell 29% since last year, and the railroads and labor unions reached a tentative deal to avert a strike. New unemployment claims, retail sales rising, wholesale prices falling, inflation going up, Bitcoin dropping, mortgage demand falling, and labor strikes being avoided are all news, and news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up for as long as the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is the rule of 72? The rule of 72 is a mathematical formula that reveals how many years it takes to double your money based on the compound interest rate you earn on that money. The formula is 72 divided by the compounded interest per year, and that will give you the number of years it takes to double the money. Thus, if you invest $1,000 at a 6% compounded rate per year, you divide 72 by 6 to get 12. That means it will take 12 years to turn $1,000 into $2,000. Look at the proof. Every year you notice how the total sum gets larger and larger, and that sum is multiplied by 1.06, the 0.6 representing the 6%. This is the power of compound interest. That is, when the interest earned on the original money per year is added to the original investment, and that total earns interest the next year. The process is repeated every year so that not only does the original amount earn interest, but the interest earn interest. It will take 12 years in our example to double the original investment amount. That is, again, turning $1,000 into $2,000. Now, if you simply multiply the interest earned on $1,000, you would get $60. And then you would multiply 60 times 12 years, then you would only have $720 in interest. 60 times 12 equals $720. Thus, you would have $1,720 in total after earning 6% simple interest on your initial investment of $1,000. As you can see, $1,720 equals $1,000 plus $720. Compound interest gives you an additional $292.20. Again, let's take our total from the compounded interest amount. That's $2,012.20 minus $1,720 gives you $292.20. Now, what if you earn 12% compound interest per year on $1,000 using the rule of 72? It would take you only 6 years to double your money. Again, 72 divided by 12 equals 6. The rule of 72 is interesting, but it is very difficult to realize because earning a high interest rate is very difficult. However, did you know that since 1957 through the end of 2021, the S&P 500 averaged around 12% per year? Actually, it's 11.88%. What do your investments earn each year? What do your stocks earn each year? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is the Southside trading watch list from the week ending September 17th, 2022. The strongest performer on the list this week is Wynn Resorts Limited, ticker symbol WYNN. It's in the first column. It increased 0.29% on Friday and was up 4.21% for the week. Wynn Resorts Limited designs, develops, and operates integrated resorts, which include hotels and casinos in Las Vegas and Macau. Looking at a summary of results, you can see that Wynn has decreased more than 23% year to date. I did not trade Wynn this week, but I have traded it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index they usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 index ETF SPY. The Southside portfolio is down minus 3.58% versus minus 18.82% down for SPY, a difference of 15.24%. The Southside is beating SPY by more than 15%. The cash flow generated by the Southside cash flow system for this week was 8.05% of the portfolio account value. The account value changed by minus 3.89%. Meanwhile, the S&P 500 ETF SPY changed by minus 5.17%. Bitcoin watch. Bitcoin lost almost 7% this past week, and it continues to be in a bear market. It is down just over 71% from its all-time high achieved in November 2021. I sold option contracts on two positions this week, one call and one put, that ranged from $48.69 to $175.01. You can get more details, including the total dollar amount of cash flow for the week, on the website SouthsideSchoolOfFinancialFreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists, levels 1, 2, and 3, level 1 being for beginners, level 2 for intermediate, and level 3 being for more advanced investors and traders. The videos are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.